Welcome, everyone, to episode 153, Capital Dialogue. We are joined by Matt Marino. Matt, it is great to have you back.
Always a pleasure. Thanks for having me.
Of course, you've been gone, but not forgotten. So we're going to jump right into it. So Sandro Occhilupo transitioned to Dakota as head of discretionary portfolio management, bringing deep experience managing private and institutional portfolios. Based in Geneva, he serves as a generalist, overseeing discretionary strategies with a disciplined, research-driven approach. He previously spent 10 years, so decade, at Banque SYZ and 5 years at UBS in Geneva and New York, so very global experience. Sandro holds a postgraduate degree in economics from the University of Geneva and is both a CFA and CMT charter holder.
Wow. Not easy carrying both.
Yeah.
What's that? Go ahead.
No, have you ever been to Geneva?
No, I have not. Is that, Geneva, New York?
Oh, no, Geneva, I think Switzerland.
I was going to say, because there's a Geneva, New York well, which I have been to. That's Hobart and William Smith's campus is right around there. I'm pretty sure. Don't quote me on it. But no, I've not been to the other Geneva.
Wow. Well, you learn something new every day.
Yeah. I will say the second one on here, just looking ahead a bit, Art Zasky, shout out a Dakota customer filling us in on this CIO transition. So thank you, of course, to all of our customers that are helping us keep the data updated. But jump in. This is a big CIO change.
Well, thank you. Art Zasky transitioned to Parsian Private Wealth as Chief Investment Officer, bringing over 20 years of experience in alternatives and investment management. I mean, that's really impressive just because given that I feel like, the alternative asset field really didn't take off until like the last 10, 15 years. So clearly been there even before that boom, which is very interesting. Based in Seattle, another terrific city evidently that I've never been to. He oversees investment strategy, portfolio construction, and risk management as a generalist CIO. Art previously served as deputy CIO at Silver Creek and has additional experience at Rockland Capital and McKinsey & Company. He holds an MBA from USC's Marshall School of Business and a BA from Boston College. Now, Brian Edward Wallace joined HB Wealth in September 2025 after 7 years with wealth enhancement in prior roles at Personal Capital and Fidelity Investments. Based in Atlanta, he serves as a generalist wealth advisor, providing comprehensive planning across investments, cash flow, risk, tax, and legacy strategies. Brian holds a BA from UNC Chapel Hill and a JD from Southern University Law Center, and is a 6-time Atlanta 5-Star Wealth Manager Award recipient. So very impressive right there. Matt, could you tell us what's going on in the wealth management side of things?
Absolutely. Yeah, Dennis Cleary and Greg Devine, they ran a $6 billion practice out of UBS. They've broken away to launch 71 West Capital Partners as an independent RIA. Cleary will be the CEO, and he's going to operate out of Boston. Devine will lead the firm's office out in LA, so they're going to have the West and East Coast covered there. The firm also includes Abigail Harris, Matthew Kirshner, Chris Carbone, William Corman, Spencer Denzinger, and Nolan Moore. 71 West worked with transition consultant Fusion Financial Partners and legal counsel Patrick Burns Jr. in association with the launch. So congrats to Dennis Cleary and Greg Devine there. And then the other one to call out, Strongheart Energy Management. They launched its second fund, and it's seeking RIA partners for the investment vehicle. So not so much a transition or an M&A, but just showing broader interest exposure that Strongheart Energy Management is seeking out of the wealth channel. So their fund 2 will target wellbore only working interest opportunities in oil and gas assets across the U.S. So shout out Strongheart Energy Management. I'll keep it rolling too with some investments that we're seeing across the institutional space, and then you can kick right into some searches there, Peter. But first thing to note with the European Bank of Reconstruction and Development, EBRD, and the World Bank's International Finance Corporation, they each committed $25 million to Dragon Capital's Rebuild Ukraine Fund. Love that name there for a fund. Providing a combined $50 million toward the fund's planned $250 million target. The vehicle will make equity and quasi-equity investments in Ukrainian small and mid-sized companies across sectors, including consumer retail, healthcare, financials, construction materials, and agriculture. They are out of DC, the World Bank, that is, and right around $86 billion in total AUM. And then the other one to call out, other side of the country here, LA Water and Power ERP, right around $21 billion in assets under management. They work with RVK from a consulting standpoint. They finalized $100 million in total commitments to Thoma Bravo funds, composed of $70 million to its fund 16, if I read my Roman numerals correctly there, and $30 million in the co-investment to Thoma Bravo Hummingbird, both originally approved in December of last year. The pension also reviewed a second quarter real estate performance report from StepStone and received an annual update from Blackstone on its hedge fund of one mandate. Looks like we have one RFP to call out here as well.
Yes, and we're going to be staying on the West Coast. The Colorado Public Employees Retirement Association, which has $65 billion in assets under management, which is very impressive and is in the metro area of Denver, interviewed Aon, Makita, and NEPC for general investment consultant role with a financial decision expected in November. The candidates received weighting scores of rankings of A for Aon and B for Makita and NEPC. And so, Matt, we're going to talk about what does this all mean. So there's a lot to cover here. And our really Dakota strategic takeaways for GPs and LPs. So number one, breakaway momentum is accelerating and RIAs are increasingly open to alternatives. The launch of 71 West Capital Partners and continued senior level movement across wealth platforms reinforce a major trend. High-producing advisors are migrating to independence to gain flexibility in investment selection, including private markets. For GPs, this means newly independent RIAs represent fresh, highly scalable distribution opportunities, especially for funds with strong branding, clean onboarding processes, and tailored RIA share classes. And number two, LP demand remains highly sector-specific, not broad-based, which is definitely very interesting. Despite market uncertainties, LPs continue funding targeted thesis-driven strategies. This is evidenced by the World Bank IFC supporting Ukraine reconstruction, the LA Water and Power leaning into tech and software with Thoma Bravo, and really ultimately this underscores that LPs are not pulling back, they're just being a little bit more selective. Managers with clear value propositions, measurable impact, and specialized domain expertise are winning the allocations, while general strategies face tougher and tighter competition. And number three, consultant decisions continue to drive capital access. Colorado PERA's consultant search highlights a critical reminder. Consultants remain powerful gatekeepers to large pools of institutional capital. Whether it's Aon, Makita, NEPC, or RVK, each consultant's model portfolio and ratings framework shapes which managers get serious consideration. For emerging and mid-market GPs, cultivating these relationships early and keeping them warm is vital to unlocking mandates at public pensions and large advisory firms. And the bottom line is capital continues to flow, but towards specific themes and specialist managers, not the broad market. And Matt, I was wondering what's going on the fundraising side of things.
Yeah, there's always activity, but one thing to call out here, Rockland Capital closed their Power Partners Fund V and related investment vehicles after hitting its $1.2 billion hard cap in less than 8 months. So the fund did receive support from a diverse group of new and existing institutional investors for their Fund V, kind of the stereotypical institutional LP, ENFs, corporate public pension plans, healthcare endowments, insurance companies. They really had the entire gambit covered from a clientele standpoint. But just one thing to call out there on what we're seeing in the environment. Just so everyone is aware, don't be afraid to register for our Philly Dakota Cocktail event on this Thursday. We do have a New York event on the 15th of December as well. And then London, too, we will be out there on December 9th. And very soon, I think we're going to probably mention this in more detail, too, on the next Fundraising News podcast, but we are very close to rolling out our AI bot. So Report Builder, shout out Joe Hoey on our customer success team.
Shout out Joe.
Yeah, the Report Builder is named Joe. Maybe we should have a Joe versus Joe segment one of these days where, man takes on machine to see who is faster at building reports, but TBD there. Very soon, by the end of the year, everyone's going to have an AI report builder accessible directly into Dakota.
I don't think it'll be your average Joe.
No, it will not be your average Joe. Let it rip. Close it out.
Thank you guys for coming out.
Thanks, everyone.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.